Hello everyone, let's take a look at the market and how we plan on trading for the next few weeks. Start by looking at the weekly, and the moving averages give a really good visual representation of exactly what's going on here. You can see confluent with the current bands, lower and upper, that we're looking at. That's the 30k resistance backed by several data points. If you take a look here in February, here in June, July, August, it set itself as a floor here. It acted as a strong resistance. Once we broke through, came back up, went over, came down, retested, and dropped. And of course, we have the psychological significance of 30k is that big round number. And then similarly, the 100-week moving average is just above it at, say, 33k over there. And then over time, it'll continue to settle down. And pretty soon we may have data to confirm that this is going to be the local top, or at least set a temporary top for the foreseeable future, at least a few months. And I'll explain why I think that might have happened later in the video. So then if we take a look at the lower bound, that's this key 25k structural level down to about 24k. This whole area is what determines whether or not we properly break this new high that the market set once it broke structure here and here, and it would take us back below this second high over here. So two structural highs at this level. This here was a lower high, this here was a higher high. Losing this and getting below this will make it very difficult to break, and will put price in a new range between a hard resistance of 20k or 18.5k. We'll really just have to see how the price reacts. I think there's a scenario where 20k becomes the support and price ranges here for a while. And we have seen evidence that there is a lot of demand at the 20k level, and it does want to hold. You can see here when price came down, wicked down to the 20k level, there was a sharp bounce and inflow of demand afterwards. We can also see a big spike in volume right after this happened. So buyers did previously step in pretty strongly at this level. And you can see with the 30-week moving average, this is slowly going to become confluent and continue tightening this range. So right now, the most probable scenario is that we break the 25k level here. And I'll show why. If we go to the 1 day, we can see a steady downtrend has been forming for a while, where we have a high there, low there, lower high, lower low, lower high, lower low, another lower low. You can call this a high if you want. It's not very clean. But even here, we had a strong bounce into resistance, and price just continues to go down without breaking this structure. So we've got two very nice plays presenting themselves here, all dependent on this structure that I just shared here. So firstly, the cleanest and easiest play is catching the break below this 25k level. If we break below this 25k level, you can look for a first entry on confirmation on lower time frames. I'll show you how I'll find that in a second. Then you've got 24k, which can hold, potentially come in as support. Then once we lose that, that could be some heavy free fall, because we don't really have that much established support in this area. We've got 22.5k over there. We've got 21k over there. We've got 20k over here. And the thing is, all of these could act as the level that holds. If I were to pick one, I'd say about 21k over here, confluent with this top, is most likely to come in. But the thing is, we've got a wide range over here to play around with, and plenty of opportunity to make money. So you can see this is a big 15% potential drop coming up on Bitcoin. Now, for now, this has held. 25k is established as a support, and if you go up to about 25.5k, we've seen a few tests here where the support level has held. Unfortunately, every test has been met with a subsequent weaker bounce up. So every time the price has tested this 25.5k level, notice it goes up, it comes down less. It goes up, it comes down, it goes up less. It comes down, it goes up less. Here it comes down and it's gone up less. And we can look for a nice play if we break that pattern. And the key level that I've been watching for a long time is this 27.2k level. It fits in really nicely with our data. And -1 deviation over here, it's pretty much consistently represented the trend of the price, be it up or down. Above, price has been a bit more bullish. Below, price has been a bit more bearish and heading towards this 25k level. So if we break above this level here, that is going to be when I'll start considering longs again. We've got first resistance here, and then second resistance here at about 29k. Break above this and we've got a good chance of getting up towards this 30k level and either being stopped here or here. Just like to the downside, this has a nice 9.5-10% opportunity to look for gains. Now going down to the 4 hour, we can start making some small adjustments to our levels. Namely, I'd bring this down here from 25k to about 24.9k. Now short term, two decent plays here. Resistance here to try short, and then a breakdown play here to try short. You can go for a small size short of resistance here if you want to bet that the price is going to come back down to about 24.9k, or you can wait for the breakdown play over here. Both of those would be following the trend and assuming we're going to go downwards. Now playing to the upside is just so risky right now until we get above this 27.2k level that I don't like it at all. I mean, historically, every time we've had a crossover of all three moving averages like this, it's been a really ugly drop afterwards. So this is the 100, the 100, 30, and 7-day moving averages. And if we zoom back here, look, we had all three crossover over here, full downtrend. All three crossover here, aggressive fall afterwards. I mean, this was the point at which all three had crossed over. And yeah, big aggressive fall. Go back here, exactly the same thing, big aggressive fall. Even here, really big aggressive fall comes with the crossover of all three moving averages. Same thing happened here. Now, yes, this is a lagging indicator, and for some of them, it happened nearer the bottom, but right now we haven't seen that sharp crash in price following the crossover of the moving averages like this. So I am very cautious right now of taking long positions. Again, like I said, I'm just waiting for this break up above 27.2k. Last thing I'll say is with the weekend coming up, I won't be looking to take any sort of short position over here. The breakdown below 24.9k or the break up above 27.2k, those will be the two things I'm looking for. If you remember, previously I was looking for the breakup above 30k over here, but now we've really tested these bottom extremities extensively, and by that I mean about 24.9 to 25k. So if we do reverse over here and start making our way back up to 27.2k, that's an indication to me that we've properly established a range between 24.9 and 30k. And if you remember with ranges, you've got the upper bound, the lower bound, and then the midpoint. When we're in this lower section here, this midpoint acts as a resistance. So we've got, mind the terrible handwriting, resistance over here, and then above it will act as support. So when price breaks above here, we've got a support. So it should hold, and we should see some movements towards these upper parts. And this will act as a magnet. Yeah, that's not the best magnet I've ever drawn. But the point is to represent how this 30k level acts once we get above this 27.2k level. And for today, that is everything from me.